If 2025 cost you money, energy, or peace, you are not alone. But 2026 is the year we upgrade our habits and our net worth. Here are 5 financial mistakes I'm leaving behind and education, data, and mindset shifts that will help you to leave them too. And number 5 is not paying taxes on time. The IRS does not play. And last year taught me this the hard way. Now, when we think about our taxes, there are some costs to not giving the IRS all of its money when it wants it. There's a failure to file penalty, 5% per month, up to 25%. And then that interest, it accrues continuously. A missed deadline can turn a $5,000 tax bill into $6,250 plus over time. Now, that's money that could have been invested, saved, or building assets instead of covering penalties. Thankfully, ours did not increase that much because I just underpaid our taxes by a little bit because I didn't want to give the government a free loan. So I was balancing overpaying versus underpaying. Usually we pay our taxes what is estimated to be due April 15th, but we actually file for an extension, which means that we have 6 additional months for me to look for deductions. Previously, I've been able to find a few. So banking on myself, I thought, you'll be able to do the same this year, Brittany. So you could just underpay your taxes in April. I was wrong. And we had to pay an additional $850 in October due to our underpayment and the penalty. Now, it's not a ton of money, but it's something that I have learned from. So in 2026, organization over overwhelm. I'm going to continue to pay quarterly taxes based upon the estimates, filing early, and documenting well, ensuring that our bookkeeping is up to date at the end of every month. Number 4 is filling my plate too full. In 2025, I said yes to too many opportunities. They were exciting, but I didn't have time to execute them all well. And really, this is called the planning fallacy, where humans consistently underestimate how long tasks take, even when we've done them before. So the financial consequences of this mistake is ideas don't generate income. Finished projects do. So I have so many ideas that I was unable to execute because I had too many of them at the same time. And professionals with fewer goals completed well outperform people juggling too many at once. So that's true in business and medicine and entrepreneurship, in everything, let alone how I was feeling occasionally throughout the year, as if I'm running on a hamster wheel, not spending enough time with my family, not taking care of myself physically, and not taking care of myself emotionally. So this is something that I am definitely changing in 2026. Capacity before commitments. And by capacity, I mean, I need to write it down. I need to sleep on it. I need to plug and play into my schedule before I say yes. Because fewer initiatives allow for a deeper focus, which generates higher returns. And I want to ask for you to help me to reach a goal. I only have 300 more hours to get paid by YouTube ads, and I really want to reach that goal. So if you have enjoyed watching this content or any of these videos, then feel free to leave a comment, to subscribe, give a thumbs up, and share this with a friend. I am doing this because I really love to share my own personal journey and understanding of finances in a meaningful way to help you. And I would love for you to help me to reach this goal. And number 3 is splitting the bill. Now, I get it. We don't want to be that person who's penny pinching and counting every cent, but trying to keep things simple by splitting the bill was actually making things more expensive, especially when everyone's ordering differently. I personally don't drink alcohol, but if my friend is ordering 3 or 4 cocktails, then that adds up. There's a money reality at play here. Social spending pressure is real. And 48% of young professionals say that they overspend with their friends just to fit in. Psychologists call this identity-based pricing pressure, the idea that we spend to match the energy in the room. But the problem is that habit quietly steals from your financial goals. So in 2026, I'm protecting my time and my energy just like I protect my money. And I would encourage you to do the same because time and energy are much stronger currencies. And number two is not doing enough research before negotiating. In some negotiations last year, like negotiating our lease for the laundromat, I started out confidently, but I was not prepared enough. I had great energy, but not enough data. And if we're thinking about salaries, only 39% of professionals negotiate their salary at all. And those who negotiate successfully can earn over $1 million more during their career. So let's just think about negotiation and doing your research before any type of negotiation, whether that's negotiating a lease or negotiating your salaries. And in fact, employers actually expect negotiations. 85% of candidates say that they should negotiate, but not everyone does. Remember that preparation matters. Negotiation is not about being aggressive. It's about aligning your desires with market value and measurable contributions. In 2026, my negotiation rule is before any negotiation, look at market salary benchmarks, look at industry reports. And in the case of this lease and laundromat, you want to get some expert opinions to weigh in before you use anything as leverage and create your wishes. Because let me tell you, if you're walking into a negotiation with emotions and this is what I think I should ask for without allowing numbers to back that up, your negotiation is from a weak position. And in 2026, we negotiate only from facts and from power. And number one, unused subscriptions. Raise your hand if you've ever paid for something all year and barely used it. Apps, memberships, software, they seem small, but they add up fast. The average American spends $219 every month on subscriptions, and most people underestimate their subscription spending by 200%. That's over $2,600 a year disappearing quietly. This is called passive financial leakage. Money slipping away without intentional decision making. So yes, in 2025, I am guilty of letting the charges run in the background because it's only $9.99. But in 2026, if I'm not using it consistently, it's getting canceled. No more, maybe later expenses. Only this actively adds value to my life expenses. Now, 2025 taught lessons, but 2026 is for execution, elevation, and intentional wealth building. Because we know on this channel that wealth isn't just about making more money. It's about keeping it. It's about protecting it and directing it towards the life you want. So if you're leaving some financial mistakes behind too, I want you to drop them in the comments. Which habits are you done with in 2025? And if you haven't already, like, subscribe, and share this with someone who needs to give themselves grace for some of their financial mistakes in 2025 and who deserves better in 2026. So I want to thank you in advance for sharing, for subscribing, for commenting, and I'll see you in the next one. Bye-bye.